It's 6 o'clock in London, it's 7 p.m. here in Valletta, where the Maltese archipelago is undergoing its first heat wave of summer. It's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID livestream, Series 12, Episode 1. That makes us, we're at Episode 67, starts here. Sex, money and fashion luxury label Balenciaga fetishizes suiting at the New York Stock Exchange, went the headline in the Wall Street Journal last week. As the Wall Street Journal put it, were the models at the Balenciaga show the first people to wear latex fetish bodysuits on the floor of the New York Stock Exchange? That's a question I can safely opine I have never considered in my entire Bourse career. I'm not sure anybody else had either until the Wall Street Journal popped it into print. At the same time, great stuff. The New York Stock Exchange floor being used creatively on a Sunday afternoon. And way to go, the trend-setting president of NICE, Lynn Martin, managing the megadata of ICE with some fabulously fashionable looks to boot at the show, well elegantly heeled at that NYSE floor Balenciaga show. Over in Atlanta, the Alliance Theatre, they've premiered a musical adaptation of perhaps the most famous movie in the canon of films about the world of trading. Trading Places has been recast as a stage musical, and moreover, the Alliance Theatre have cast all the leading parts as women. Presumably that turns the aging commodities house of Duke and Duke into Duchess and Duchess. Crypto exchanges set their sights on the sleepy futures industry, went the headline in Forbes. That would be Forbes, which is of course now 20% owned by one of the leading crypto exchanges, Binance. Anyway, in Washington, D.C. last week, the CFTC, the futures regulator, hosted the Sam Bankman-Fried versus the World Round Table, where, shockingly, the multi-gazillion-dollar balance sheets of the CCP clearing business didn't just go, oh, you're totally right, and follow the youthful hubris of what looks like a worryingly vast lack of think-through to what is a fundamentally fascinating idea from FTX. They've also got one very boring idea too. See below, you can manage to talk about disintermediation. Well, I mean, that dates all the way back to, gosh, books in 1999 called Capital Market Revolution, way before. If you can show your worth to the food chain, you can stay. Whereas FTX seem to be saying that if you're in the food chain, you're probably past your sell-by date as a broker. A view which, while harsh, in some cases could be arguably fair. The intermediation argument has been increasingly irrelevant for over 20 years, and the sudden wake-up of the Futures Commission merchants to the removal of their divine right to control exchange access effectively dents opposition to the truly dangerous element of the FTX plan, which is to create a closed Autobot system which is untested in widespread use, but seems to be able to hold together a niche cadre of retail supporters. Yet it could have a vast systemic impact if and when, and I'm much more in the when camp, it suffers problems. What concerns me about last week's proceedings in Washington, D.C. was how it appears to become a race to the bottom to prove who was being more condescending about the other party's supporters. Both sides of the argument appeared culpable here. Of course, the worry remains that FTX are convinced of the perfection of their model, yet have not thought things through, to which end, of course, it may well be over 20 years old, but I must repeat my rejoinder to the many folks startled at the time by the collapse of the geniuses hedge fund long-term capital management. As I said then, and it still remains valid now, LTCM's maths were indeed impeccable, but sadly, the universe is marginally flawed. Our guest today, ladies and gentlemen, is Artur Fisher, my old friend from Berlin. We're going to be discussing the topic, Bourses as business, good or bad. Artur has an incredible and eclectic background. He was the CEO of the Berlin Stock Exchange, Börse Berlin, until his retirement in November 2019. Artur has a strong background in technology. That's putting it very, very mildly. I mean, his original degree was in electronics, specializing in high-frequency communication, which led to managing a shortwave transmitter station at the Rhein Main MAC, working for the US Signal Assessment Unit. Then he became real-time computer systems controller for television studios. That led to Artur becoming the director managing the Frankfurt Stock Exchange trading floor, delivering products like the DAX Index. Then Artur spent 12 highly productive years as joint CEO of the Berlin Stock Exchange. He was also executive chairman of Equiduct Ltd in London and EASDAQ in Belgium. Artur was also an MD of the Public Law Office of the Berlin Senate, implementing with a team of lawyers regulatory measures associated with the stock exchange under EU law. Artur has been a serial board member in multiple different jurisdictions, and he's also featured widely on the media, including on the BBC, Bloomberg, and Phoenix Hong Kong News, amongst others, discussing European economic affairs. Artur, greetings, good evening. Where in the world are you today?
Hi, Patrick. It's 1900 on my side in Berlin. It's quite sunny and nice, but I guess not as hot as in Malta.
No, nothing's quite as hot as Malta has been today. We've had about 31, 32 degrees here, but fortunately a little bit of breeze during the course of the afternoon. Hopefully there will be good weather later this week in the UK as well, because of course Her Britannic Majesty Queen Elizabeth II is celebrating 70 incredible years as the Queen of England. We wish her every success, and everybody amongst our UK viewing cadre, we hope you are going to have a wonderful long weekend. Speaking of which, a couple of our viewers from the UK are already in the studio watching today. Good evening, Simon Huckle. Good evening, everyone. Looking forward to another great show. Thank you, Simon. Really, really good to see you. I hope all's well with you. And Marcus Ward, good evening from frozen orange juice. Well, I hope something looks up, at least that the orange juice is managing to be a bit more drinkable in the near future, Marcus. Good to see you. If you've got a question for Artur, drop them into the conversation as usual. And please do show us a little bit of love. It helps the algo bots manage to get us up the rankings so that more people can see these shows. So, Artur, talk to me a little bit. I mean, I give a very, very high overview of your remarkably eclectic career, which has always had a unifying factor of technology through it. How did you actually get into the stock market business?
That's a very good question. Actually, as I told you, I was at the time developing television studios for a company called Bosch. And Bosch had developed originally the PAL, the PAL system, the color system. So I was developing my own computer, built my own computer, developed software without an operating system. And everything had to work in real time, because what we did was we had a multiplexer where you switch the source of one video to another one. And you don't want to see that on your screen. So you have to do it in 20 milliseconds. So my program had to run in 20 milliseconds, which even today I would say is real time. And when the Frankfurt Stock Exchange had to replace their trading floor, actually they opened up or they had an open ceiling from the ground floor up to the fourth floor with daylight coming through. And because they were running out of space, they had to put in additional floors. And they did that during operation. So the whole floor became a building site, and they looked for someone who could put the information system, which was at that time an analog manual system. They used air pressure to move little cylinders around with paper in there, which was then typed in somewhere else. It was kind of very old, antique, and complex. And they looked for someone who could actually digitize it using a combination of computer technology and video crossbars. That's what we call it. You don't find a lot of people who understand that. Funny enough, I did understand that. So I was lucky that I was one of the few people who could do the job. And I did that. And in that course, I had to learn, like any other business analyst, I had to learn how the trading floor works. So I spent about a month in the pit and I tried to understand what the market maker were doing, the makler, the Kursmakler as we call him. And I hope I did understand it. And then I wrote the specifications for the system, and a year later we implemented it, and it worked. So, you know, that's how I got into this whole thing.
That's quite incredible. And so what year was that when you were doing this in Frankfurt?
I started that in 86, I believe, 86. And I worked at the Frankfurt Stock Exchange until 1990, something like that. And as you said earlier, you see that the key point was, for the very first time, we had pricing available close to real time, and it was available in a digital fashion. That was a key innovation, because before, as I told you, the market maker, he wrote the price on a piece of paper and sent it through this underground tube system. And then the ladies somewhere in the exchange typed that in, and it went out on the display board. And it also went out by 50 boards, which is not very fast, through a ticker to Reuters. So that was not real time. That was pretty much a delay of, let's say, 5 minutes, 3 minutes, something like that. So with the system we implemented, we had now the market maker, when he did the pricing, he typed it himself. So it was real time. And whatever he typed in not only showed up on the monitors on the floor, it also went out through our dedicated price information system, connecting all the Reuters and whatever, Bloomberg's in real time. But not only that, we now had the opportunity to calculate derived data from the market data. And that brought me to the idea, why don't we calculate an index? We had an index, but that index, the Frankfurt Stock Exchange index, was calculated once a day, consisting out of about 100 different instruments. And to do something like that in real time and to display it as a chart on the floor, and it's still there. When you take a look at the Frankfurt Stock Exchange floor, you can see the display tables. They are still the same, which I didn't implement them myself, but which were part of my project. So, you know, I did the specifications, we found the companies who did that, and they installed it. And that's still all there. And you can see that we had the ability to calculate an index, which then became the DAX. And we showed that index on the display board. And when we started the price information system using the German word Kursinformationssystem, if you abbreviate that, you come up with KISS. So I developed the KISS index, and the newspapers had a real laugh about it. Said in Frankfurt, we now had a KISS index. It was really funny. But the players in the market very swiftly understood the value of what we were doing, that we had a real-time index. I mean, that was really something new, and that we could distribute it to all the information systems in the world. And we had Rüdiger von Rosen, who was the head of what we call the Arbeitsgemeinschaft, the cooperation of all the German exchanges. And he realized, and he was also asked to create a German index, Deutsche Aktienindex, which is the DAX. And I was part of that project group. And I could provide all the technology inputs. And, well, here we are.
Incredible, a very data-rich answer, delivered at more than 50 baud as well, I would have said. I think 50 baud, that's about carrier pigeons can actually move faster than the data. I think that's big, can't they? But it was also incredible at the time. I mean, I agree with you. The London Stock Exchange at the time, they went to SIAC, the Stock Exchange Automated Quotation System, in the Big Bang. And of course, the thing that was hilarious about that was that they calculated, they used to have just the same as Germany. They had the FTSE All-Share Index, which only got calculated once a day at the end of the day. Actually, sometime in arrears of the end of the day by the time they calculated the whole thing. And then they moved to the FTSE, and the FTSE was real time, but it was actually recalculating every minute, which meant that you could actually manage to make money for a while in the FTSE 100 futures pit, because you could try and work out what all the different beta values were of the shares that you saw on the screen going red. And then some very smart primary tier one investment banks, they were actually getting software that rewrote the index for them in real time so that they got ahead. And thereafter goes the 20 millisecond arms race that we've all ended up in for the course of the last 30 years. Incredible that you can do that with 20 milliseconds in relation to the whole screen changing in television, even at that point in the mid 1980s. That really is quite an achievement, actually. It's quite staggering altogether.
I built my own computer, and we did that without an operating system. So we had something called an in-circuit emulator, an ICE, which cost about 150,000 Deutschmark at the time. It was, quite state-of-the-art kind of computing at that time. Today, obviously, anymore. Yeah. But let me just add something to the story. One of the things we did, you just reminded me on that. The stock exchange, the Frankfurt Stock Exchange, did provide every day the alpha and the beta factors of the DAX to all the different stocks the DAX is made of. And that was another little project I did on my side. I'm interested in statistics and mathematics, so I learned all about that, and we published that to the community. It was rather exciting. And the last bit, and then this is memory lane for me. I'm very difficult to stop now, so you have to put your foot down. But the last bit, we all talk about latency, latency. We talk about nanosecond latency, millisecond latency, something like that, microsecond. All right, I'm settling for microsecond. So at that time, the latency of a trade was something like, 24 hours? Because what happened is, you sent your trade to your bank. The bank actually had at the floor a fax machine or a printer. The orders came out of that machine. The broker went to the pit, got its trade done. The trade was then added into the system in the evening, about 6 o'clock, into an IBM mainframe. And then it got reconciled with the bank during the night. And next morning, the customer, if he was lucky, would know if his order got executed for what price. That was the old system. So when we introduced BOSS, which was the order routing system, that was another project I did. We had the orders coming from the banks in real time to the floor, and we then, I suggested to the banks, and some of them actually did that, we used the price determination as a signal back to the bank that the order got executed and the trade was done. And we moved the latency from 24 hours to something like 2 minutes. So that was quite an achievement at the time. Today, everybody talks about latency. At that time, it was not really a topic, but we created an environment where latency started to be a factor.
And it's fascinating because you think about it at the same time. I mean, there were all manner of products around the stock exchange system, not necessarily in Germany, but I can think of, there were lots of French bonds, for example, which settled on something like a T plus forever schedule. I mean, they were T plus 24 or T plus 20 or something. Absolutely outrageous. And in fact, I mean, the London Stock Exchange, for all of the excitement of Big Bang, was still on its account. So therefore, they were settling sometimes T plus 21 on things over the course of
we never did that in Germany. In
yes,
Germany, we never did that. We always had T3. That's something we were very advanced at all times.
Absolutely.
But it's a system you can abuse. It's a system you can abuse. I can tell you a little story here.
Okay.
You see, when you at that time, our Kursmakler, they are intermediaries, right? They normally should just fix a price between buy and sell orders. So they looked at the buy and sell orders, try to calculate the equilibrium, and then fix the price. That's how it worked at that point in time. Now, as you know, sometimes you're missing some orders on the buy side or on the sell side. And then what they could do is they could actually take those orders themselves, those shares themselves, without actually paying for it, which is quite nice. Yeah, so you can speculate without paying for it, but you had to settle it 3 days later. So you had 3 days time to either go long or short and make a profit with it. Now that works in normal times quite well, but if you have a crash, and we had a few crashes, then you're really stuck. You really have a problem, and you hope that the market will go up, because if it doesn't go up, you have to sell your house, you have to sell your business. I mean, it's dreadful. I have seen grown men in tears because they were, from one day to another, they lost everything. So in those circumstances, some tried to play the system. And what they did was, since they had 3 days time, they just put on the ticket a counterparty who wasn't the counterparty. And it took them 3 days to find out, because after 3 days they're named or after 1 day they're named as a counterparty, and then it goes up the chain. So then it bounced back, and then they put somebody else on. So they tried to play the system, because it was all manual. And our job as an exchange was to figure it out if people were doing that, and to put a stop to that. That was quite an interesting thing I learned at the time. Anyway, got to carry it.
Well, of course, the Chicago Board of Trade at the same time, it famously used to have huge numbers of trestle tables would be put up in the atrium every day, and that was the out trades where you had to go and sort through. And actually there was a sporting habit, not very sporting really, where if you were new and on the floor, they would have a tendency to someone would spot your badge and they would write up a trade from their pit. So I recall somebody who went to trade treasury bonds and suddenly found himself disputing a trade, and I think it was wheat or pork bellies. And he found the guy on the other side of the trade and said, "Look, I've never seen you before. I've never set foot in your tail." And he went, "Oh, well, it's a fair cop." But it was a good chance to try and, get one over on you as I was wandering by, because I walked past you in the coffee lounge and saw, "Oh, that's a mnemonic I haven't traded with before." So he just tried it out to see if he could get a trade. It's quite incredible. The thing that is incredible is to think about how that whole, the risk at the time seemed incredibly modern. And when we look at it with the benefit of 30 years of hindsight, it all seems terrifyingly ad hoc by comparison to what we have today. It's incredible.
You see, things have really moved on since then. And the one critical point is that at the end of the 80s and even to the 90s, you could do things manually. You could interfere. You could slow things down and deal with it. In today's world, that is almost impossible. It is almost impossible, because nobody sits down and calculates the equilibrium price manually. The computer does it. And if a trade happens, but in reality that's not in line with at least the German regulation. And one of the problems I faced at Equiduct was that we have this fully automated system. We have huge volumes of trades going through. We have market data going all over the world. And suddenly my trade surveillance team says, we have to cancel that trade. That's the worst thing you can imagine, that you've been told by the regulatory side, you have to cancel the trade. You understand what that means. I mean, it puts everybody in a bad position. You have somebody who thought he did a bargain, and he probably already traded the money he made on. It's already gone and done. You have all the associated systems. They have processed that trade. The market data out there. It influences indices and whatever. And suddenly you need to cancel that trade. Awful.
And the funny thing about that is that, of course, with electronic markets, it actually is worse for the confidence of the market. I mean, this was something I remember working with a lot of exchanges when we went off the floor to electronic markets, because a lot of exchanges where, well, we have a rule book, it'll be perfect. And it was a case of, well, no, actually, suddenly the rule book, which is all to do with a group of mostly blokes standing around and shouting at each other in plain sight, is not a rule book that necessarily works electronically. And equally, in plain sight, if someone made a mistake, which would quite often be me, you could easily turn around and say, okay, I'm an idiot. I'm terribly sorry. I've made a mistake. We're going to have to cancel that trade, do whatever. The rest of the market can all look at it and go, oh, well, it's that idiot Patrick's made another mistake, blah, blah, blah. And you moved on. Whereas when it happens in a closed user group of computers, everybody sees a conspiracy instantaneously with whatever you have to cancel, even if it's on absolutely sound grounds as to why the trade is not allowed to take place. And it's curious how electronic markets have some certain facets that aren't necessarily quite as good as old open outcry. And I was certainly one of the earliest advocates, along with you. Well, you were there even before me, advocating for electronic markets. It's quite incredible. Let me just say at this stage, hello to Craig Richardson. Good evening, Patrick and everyone. Thank you very much, Craig. It's a pleasure to see you today in the show. So, Artur, you went then, you were under, if I remember, well, you were talking about Rudiger von Rosen, an excellent man altogether, who was very, very pivotal in the whole revolution of the Deutsche Börse in the late 1980s. Your tenure then, you moved from Deutsche Börse on to the Berlin Börse. How did that come about?
No. There are more details, and obviously, we had to cut it a bit short. But what happened is, I was doing the REX, which is, after we did the DAX Index, we did the bond index, which was called REX. And the guy who did that index with me, he became a board member of Hypobank. And he was, he really liked working with me. His name was Wertschulter. And he really wanted me to join him. And I didn't really want to go to Munich. I had not a big interest in it. So he kept offering me different jobs. And finally, he offered me to go to London to be on the board of a mortgage bank. And that really was intriguing to me for two reasons. Because I could work in London, which I wanted, always wanted. And second, I could learn a bit more about the credit side of the banking business, which you need to do if you want to go eventually on the board of a bank. So I loved that. I went to the UK. I've been in the mortgage business for 3 years. And then a good friend of mine, Serge Demolier, who worked for Dresdner Bank, who helped me with the DAX Index. We worked very closely together. He got a job on the board of Bankgesellschaft Berlin. And he gave me a call and he said, why don't you join me in Berlin? And I thought about it. And well, that's what I did. So after 3 years in the mortgage business, I went back to Berlin. And here in Berlin, with Bankgesellschaft, we did set up trading floors, middle office system, front office systems for all the different asset classes, equities, bonds, FX, derivatives, the whole lot. So we had about 350 positions in Berlin. We had about, I would say, around about 100 in London. We had some 20 odd in Dublin and another 20 in Luxembourg. So that was a setup. That's the kind of project I did with my team. We put all the infrastructure in place. We had all the software developed. We used Infinity for the middle office project, and I did this from 95 to 2000, 95 to 2000, and then the bank had some real problems with company loans and so on, and they asked me to dismantle everything I put together, and I didn't really like the idea. So I left the bank, didn't want to take apart what I did. And then I worked as a consultant for the Berlin Stock Exchange. We did NASDAQ Deutschland, which was a very exciting project. That was the first time I came across EASDAQ. And in 2007, the Berlin Stock Exchange asked me to join the board and to do Equiduct. So that's the gap I tried to explain.
Wow, speeding through. Well, that brings us.
Shows you how old I am, by the way.
You don't look it. You don't look it at all. So it brings us to that very interesting crux of today's conversation, because you arrived in the stock market business when it was still essentially a club throughout the world, although then you saw the fascinating formation of the modern Deutsche Börse in front of your very eyes. I mean, you lived through it essentially.
I was part of it. I was part of it. You know what I say that?
Go on.
The Deutsche Börse, the Frankfurt Stock Exchange, was a part of the Chamber of Commerce. That's how the exchanges are organized in Germany, or have been organized in Germany. And when Napoleon came into Germany, one of the goodies he brought to us was a Chamber of Commerce, and the Bourses was part of that. And as that, they're a non-profit organization. So what we did at the time, we did spend the money we need to spend. And we had a few, how much money that would be. We had a budget, obviously. And the members had to pay part of their budget depending on the activity on the exchange. And at the end of the year, if we didn't have enough money, we asked them to fill the difference. And if we had too much money, we passed on the extra, and then we pushed the reset button, and the new year started from zero again. So Dr. Breuer, who later became the chairman of Deutsche Bank, and who was the person behind the Deutsche Terminbörse, DTB, Breuer said, this is no way you can compete as an exchange on the world stage. It's not going to work. You need to invest, you need new systems, you need millions, and you're not going to get it from the members. You need to get it from the capital market. So we need to change that exchange into a shareholder company, which we did. And now my little part comes in. And remember, we're talking about 1989, something like that, I would say, 88, 89. I was the only one who had a laptop computer, a Toshiba laptop, was quite large actually, and I knew how to use Lotus 123. And the reason why this is significant is when the exchange got public, we needed to, they needed to decide how many shares the different market participants would have of the exchange. And they came up with different models, and obviously it was very political. So they wanted to know in an instance what kind of consequence that model would have in respect of the different shareholdings. So that's why they asked me to sit in and do the computations whenever they had a new model. I could do it on the spot. And that was my little contribution of making the Frankfurt Stock Exchange a shareholding company.
It's incredible, isn't it? I mean, the impact that spreadsheets had on our world. It's difficult to believe that there was a whole world before spreadsheets. I think the entire production team this evening are gobsmacked at the idea there was civilization before there was spreadsheets. They've all grown up with them. It's truly quite amazing. And in fact, you look at how people started using spreadsheets in trading, and it became absolutely radical. I mean, it was almost like voodoo when people started first applying spreadsheets to their trading. It was just such a remarkable concept from start to finish. So it's interesting. I mean, Dr. Breuer, he had an amazing impact on the whole stock market business worldwide, because the Deutsche Börse, and particularly his Deutsche Terminbörse creation, really revolutionized and drove the death of open outcry trading in Europe subsequently in the course of the next decade, when it became, before it became even in Eurex as it is to this day. When you got to Berlin, what was the setup there? Was that more of a commercial business, or still very much a member-dominated organization?
Well, it was very much a member-dominated organization because for two reasons, or let's say three reasons. First of all, the Deutsche Börse is the only one who had the money and the team to build their own system. At that time, in today's world, more like Börse Berlin or like Stuttgart, they acquired that ability. But when I came to Berlin, the regional exchange, as we call them, didn't really have that kind of possibility. So that was a limitation, because they had to use a system called Xontro, which was used by all the other exchanges. So they couldn't really differentiate product-wise from each other, because they use the same system. So if you use the same system, how can you differentiate your service offering? Everybody's using the same. That was one key element. The other element is obviously that exchange always have been political, and it's something which comes with we're supposed to be a neutral party, providing a neutral service to the different sides of the trade. But in reality, you never really can afford to be neutral. You can try to do that, but you depend on the big banks and you depend on the liquidity providers. It's a very difficult balance to do. So when I came to the Berlin Stock Exchange, as I explained, we've been a company which still made a profit because at the time in 2007 the trading business was okay. I then made the suggestion to differentiate from our competitors by having our own system and by making our own service offering. And remember, at that time in 2007, we just were on the brink of MiFID and best execution. So best execution wasn't there yet. It was supposed to be there. And my idea was to use Equiduct, because Equiduct is calculating a price which is the best price across Europe using a volume-weighted average price. It's very sophisticated, and trade by trade, you get the best price. And I believe that with best execution coming into force, that we had a very good chance to succeed and become a real big player.
And actually, you hit on something really interesting there, because you mentioned the fact that essentially exchanges can't afford to be absolutely entirely neutral in a certain sense of the word. They've always got to make sure that they're keeping various parties happy. Therefore, how do you see this big question of this evening? I mean, Bourses as business, is that good or bad?
That is a question I was struggling with most of my professional life, because it really is an interesting point how exchanges have moved on. You see, when you're part of the Chamber of Commerce, you are much more in a position to be neutral when it comes to decision making concerning your members. When you depend on the income you make from members, things become a little bit more difficult. And let me give you some examples. Let me start with a simple one, with a very simple one. I had some years ago a long discussion with Ludwig von Reiche, who was at the time the chairman of the American Chamber of Commerce in Germany. And that was about, I would say, 6 years ago, something like that. And as you probably know, Berlin is quite a center for startups. And we have a lot of seed capital going around. We have a lot of... So he was involved in that. And he was looking for exit strategies. So he came to me and he said, guys, you're an exchange. Why don't you offer those startup companies, after they have reached a certain maturity, an exit by going public? So the problem we had here is that we are doing this to earn money. And in order to analyze a company, to figure out if the product they're offering has a certain quality, which we then can associate with our different market segments when we have primary listings, we have to spend a lot of money and a lot of effort to do that. We're talking about significant work, because you have to have people who understand that business and understand the metrics behind. And then you ask your question, can you get that money back in? And the answer is not really, because we're not Deutsche Börse. Our distribution power is much more limited. And as you know, if you participate in a primary offering, you associate your brand and your name with it. And you know that from 100 startups, maybe one succeeds, and from about 10 companies who go public, maybe one or two become really successful. But the other 8 or 9 are going to lose money for the customer, and you destroy your brand. So for an exchange like Equiduct or like Börse Berlin, it was commercially a very bad thing to get involved in primary listings. From a market point of view, looking at the different startups in Berlin or elsewhere, we left a gap. And I really felt bad about it, because that is one of the key reasons why exchange exist. Now, if I had a way to take out the commercial element of out of the equation, things would have been much easier. But we can't. So we never did a primary listing. We never approached that. And people were quite unhappy with that in that respect. That is just one example. I can give you other examples. Short selling. In Germany, we have a different way to handle that than in other countries in the EU. At least at the time when I was still in charge. I think it's still the same, but I put that disclaimer on there. I think it's still the same. In Germany, it is not only the responsibility of BaFin, our regulator, to decide if an instrument has to be suspended because we want to stop short selling. It is also the responsibility of the managing director of the exchange. So what happens is, you are running. Let's say you have an instrument where you do not a lot of business, but some business, which is also listed on the Frankfurt Stock Exchange, on the Paris Stock Exchange, on the London Stock Exchange, and they decide to suspend it for whatever reason. So they decide to suspend it. So normally we would then follow and suspend it as well. However, there are a lot of customers who really want to trade. They want to unwind their position. They want to trade. So from a commercial point of view, there is a huge incentive not to suspend, because now suddenly I'm the only one left, and all those orders come to me, and I make a lot of money commercially. But I'm not doing my job as a regulator, because common sense tells me that if all those major exchanges suspend that instrument, there is a real need to protect the investor, and I should suspend as well. So that is another example.
Fascinating altogether. And therefore, I mean, I'm quite interested because, of course, you talked about listings, and well, we can all remember what happened with Deutsche Börse during the original dot-com bubble, where essentially nobody on the management board was willing to defend the Neuermarkt after the Neuermarkt went pear-shaped at that point, and therefore ultimately there was no startup market in Frankfurt for a very long time altogether.
Yeah.
It is quite fascinating. So inherently, you have a huge series of conflicts of interest to running an exchange. Inherently, you have a brand that's vitally important, and you're very concerned about actually managing to damage that. But do those things, how fundamentally do they really change when you're a business as opposed to a mutual or an entity under the Chamber of Commerce?
I think drastically, because if I don't have that need to look at my bottom line, if I can just charge my members a fee, I don't care. It's if the members depend on me, I charge them whatever I have to charge them. End of story. My decision making will be purely made looking at the regulatory side. I will not be tempted to look at my bottom line. Why would I? I will do my job as good as I can. I come back to what I said earlier about trade cancellation. We have this situation in Germany whereby a price has to be a market price. Now, I have long discussions with my colleagues in London who have the opinion that whatever price my algorithm fixes is the market price. Whatever price it is a market price. Whereby in Germany, the regulator says you have to take into account the price discovery, you have to take into account the price on other exchanges in the same instrument at the same time. And if you're the only one deviating by a large degree, then you need to stop that. Your price is not a good price. You can't trade. You can't trade. So at the same time, if I stop trading, I have my, and if I start canceling trades, I have my customers breathing down my neck. I had a situation with one of the big Dutch banks whose trades I had to cancel. They threatened to sue me, and the damage done was something like in 100,000 euro at the time. And from a regulatory point of view, we've done everything by the book, everything correctly. But those idiots, if I may say that, and I didn't mention the name of the bank, they didn't take me serious when I said we're going to cancel the trade. So rather than unwinding their position, making sure that the customers they already informed either get told that the trade is done, or that they buy the inventory somewhere else because the market was moving swiftly away from that price, they didn't do anything. So as long as they waited, as long as they discussed with me, as worse the situation got. And at the end of the day, because I didn't want to lose my customer, we shared the loss. So they paid 50%, we paid 50% for a decision which was perfectly okay. It's not a situation I like to be in. It's not fair, neither to the customer nor to the exchange, that you have to have that commercial element when you try to enforce a regulatory procedure.
Yes, so obviously that's one big issue. I mean, the whole nexus between profit and regulation. But on the other hand, if we look at the recent history of exchanges, we have seen the for-profit exchange era has seen the business of Bourses expand exponentially. So is that not an argument that Bourses, commercial Bourses, are actually a good thing?
You see, let me address this problem from a different angle. I believe the issue is really the regulatory side. As I explained, I try to do my job by implementing what the regulation said in Germany. I believe exchanges today are by far not anymore what they used to be. And I believe the regulation around it is in Germany old-fashioned. And to some extent, we're very much connected to ESMA. We can't really deviate in our regulation from the European regulation too much. I believe it needs a rethink in some extent, in particular when it comes to so specific things which only happen in Germany, where we desperately try to make it somewhat in line with a European regulation. Regulation should take a look at things like crowdfunding. How does crowdfunding work? Regulation should take a look at all the Bitcoin business. What's the market price for Bitcoin? There is no value behind it. It's only offer and demand. The markets are much more sophisticated today as they used to be, and the participants, I believe, are also much more sophisticated than they used to be. There is not anymore the poor investor who has no clue, because we have enough regulation to prevent that investor from trading directly at the exchange. So we should really rethink our regulation and make it simpler, make it more straightforward, and accept that sometimes you can't be perfect. Regulation needs to be automated. You cannot, in today's world, anymore have people trying to figure out what's right and wrong in the markets where we are going. They should think about the algorithm, and the algorithm should be tested, and they should, that's where we should spend the time. But then everything coming from regulation should be automated, and then I don't have that problem. It goes away and things become much smoother. And again, we never should try to be perfect. We can't afford that. The 80-20 rule, yeah? So
Yep.
There will be accidents, there will be things that go wrong. We can minimize that, but we have to accept it.
Well, I think the other thing is that it seems to me that regulation spends so much time worrying about people having crashes in the car park. And actually the difficulty is then they let people kill each other on the Autobahn, which doesn't really strike me as being a sensible degree of proportion. So therefore, once every so many years, they oversee what is essentially a bloodbath at 350 miles an hour or umpteen nanoseconds, but they don't really concern themselves so much about that because they're always worried about these little parking infringements, which probably are not really that worrisome. So actually, you raised an interesting question. The regulation stuff, really fascinating to hear in context of Bourses as business. I actually thought you were going to answer the question by going into technology, because certainly the one thing that's clearly obvious is that nowadays, if we offered, good grief, the average teenager, like those that are playing on the streets behind us, anything that moved data at 50 baud, we would be laughed at. And obviously the scale of the technology allows our markets to be vastly more sophisticated than ever before.
Well, technology is a two-sided coin. I'm struggling with it sometimes because, you see, in the 80s, the market wasn't fair, and today the market isn't fair. And technology plays a role at that time, and it plays a role now. That's very kind of confusing the way I say that, but let me give you an example. In the 80s, whoever was had a position in Frankfurt at the pit had an information advantage because he could listen to what was happening, and somebody sitting in Munich or New York couldn't do that. So there was a clear advantage for someone who had a seat at the pit. That seat, it cost money, and you need to be specialized and so on. In today's world, we have the same situation with HFT. So we have some participants who have sophisticated technology, like Optiver and like Citadel and others, and they actually can make money by using that technology advantage. And then we have the regulator saying that's not fair. Well, it's been like that forever. That's part of an exchange. You always have that. You have the ones who invest the money and have the knowledge and actually create volumes with little margins to make a living, and then you have the ones who think for a day and maybe trade another day. Now, Patrick,
Academia. Somebody's muted me and unmuted me. Whether it's the research paper, The Market for Lemons, from all those years ago, or something along those lines, it is quite interesting because information asymmetry is real. And you're absolutely right. I can remember being in the pits and we could have very significant marginal edge of information at different times, but it's impossible to create a level playing field because that simply does not work. We have got a couple of fascinating comment and a question coming in, so we're going to close out the show with those. Robert Brown of clearingandsettlement.com. Great to hear from you once again, Robert. Thank you very much for your comment. These presentations are always well done. Thank you. Well, we're really glad to hear that, Robert. Thanks for joining us again this evening. And now we have a rather lengthier question come in from Thomas Carruthers, an exchange veteran. Hello, Patrick, and good evening, Artur. Just thinking about best price and best execution. Obviously, these are obligations on market participants, but wasn't price improvement also a big business opportunity for Equiduct and the VBBO? What do you think of that opportunity now, or is it simply a matter of compliance?
Well, let me say hello to Thomas. I had the last time I met Thomas, I think we had a breakfast in London, and I have good memories discussing matters, capital market matters. So in respect of his question, price improvement, that's a tricky thing. That's a very tricky thing. The Paris Stock Exchange, they have best of book, and in best of book, the market makers compete with price improvements by having a calculation of the best bid and the best offer, and then the market participants improve on that, and whoever has the best improvement gets a deal. That's not the way the Equiduct model really works. We looked at that. We came up with some mathematical models how we could simulate that. But in principle, our market makers compete with the volume. At least they did at the time when I was still running Equiduct. What they do today, obviously, I don't. It's 2 years ago, so they might have changed that. But at the time, every liquidity provider had to provide the same price at the price at the VBBO. But the decision who would get which liquidity provider would get the order was mainly based on the volume they were offering. So if they offered the highest volume, the order would be executed by them, and that's how we selected or we distinguished the competition. I hope I answered the question, Thomas.
I do hope so too, Thomas. I certainly feel that you answered Thomas's question very elegantly. It's great to see you, Thomas. I hope all is well in your world. So we come to the conclusion of the show. Artur, let me ask you that question we ask of all our guests. Where do you see the capital market revolution going next?
You asked the right guy for that, because I'm a conservative person and I don't really trust technology too much. But I believe the future of capital market is very much connected to artificial intelligence. I think that AI will allow market participants to analyze the data we have in a much more sophisticated way. And what used to be HFT, high frequency trading, in a few years to come will be a combination of HFT and AI, whereby those models at the end of the day will create again an advantage for the real key players. I make an assumption that we already have some kind of pattern recognition out there. I'm pretty sure that the regulator eventually will try to put a stop to that. But those are my 2 cents. I think artificial intelligence in trading will make a big change. I'm kind of negative when it comes to blockchain and to settlement. I don't really see a big advantage of a distributed ledger. Our clearing systems work very efficiently, and I see actually no need. I could be wrong, but I see no need for that. And the blockchain is an interesting concept, but we have a very efficient system in place already. So why would we throw that away to replace it with something which inherently is more complicated and doesn't give us a real advantage?
And there we have it, ladies and gentlemen, baby bathwater repo on the question of distributed ledger versus the legacy clearing systems. Next week, we're going to be meeting an SEE market builder, none other than Ivan Steriev, the chief executive of the Stock Exchange of Macedonia. And that will be at the usual time of next Tuesday. In the meanwhile, I have to say, really, really fascinating. The idea that we're going to bring together artificial intelligence plus high frequency trading, which I suppose means that it becomes the acronym IPO-VID, which sounds like a sneeze, but I don't think it's anything that we're going to be sneezing at, because it'll be a lot more talented at speedy pattern recognition than mere humans like Artur and I. Artur Fisher, it's been an absolute joy to have you on the show this evening. Thank you very, very much for being a fabulous guest discussing bourses as businesses, good or bad. Thank you very much also to all of our many commenters and questioners this evening. Much appreciated the feedback from Simon Huckle, Marcus Ward, Craig Richardson, Tomas Crothers, Robert Brown. It only remains for me to say thank you very much to our fabulous guest, Artur Fisher, this evening, and also our wonderful production team too. Racy, Jamil, Mary and Beata. Great job all round. My name is Patrick L. Young. Ladies and gentlemen, whether you're on the blockchain or not, I wish you a great week in life and markets.
Thanks, guys.